Hello and welcome to IG's Trading the Markets podcast. Tesla's CEO Elon Musk tweeted, quote, "Many exciting things will be unveiled on Battery Day. The hotly anticipated event on the 22nd of September will be closely watched by its investors." But it comes after a rough week for the stock, which saw its shares suffer its worst session within its 10-year history as a public company. Joining me to discuss is Tesla shareholder Ross Gerber from Gerber Kawasaki. Ross, great to speak to you again. Let's start with Battery Day. What are you expecting there? What would it take to move the stock?
Well, I'm expecting some big breakthroughs, actually, and Tesla has been pretty transparent that they expect to announce some pretty incredible things. And what we really think the game-changing element is creating a battery that can drive 1 million miles, that can charge very rapidly, have 600 miles per charge, and basically make Tesla electric vehicles way better than ICE vehicles in every manner. So the one advantage gas cars have is how quickly you can refill gas and how big a gas tank is. And that's what Tesla's going to take away. But the other side is battery storage for solar power. And that's where there's just enormous opportunity to completely change the game in energy. And that's why I think there's so much potential in Tesla shares right now.
Yeah, so talking about the shares, I mean, it's been an interesting last 10 sessions or so. Some major volatility we saw last week. It managed to stage quite an impressive comeback nonetheless. What's your kind of take on all of these gyrations that we're seeing at the moment?
Well, we're long-term investors in Tesla, so we look a little longer term than the last couple of weeks. And so when you just go back for the beginning of the year, Tesla's gone up 400 to 500%. So to see pullbacks of 20, 30% after you're up 400 or 500% is very, very normal. But Tesla's been one of the best performing stocks in the stock market this year, irrelevant of the volatility. But it's a high risk investment, and now it's a highly valued higher risk investment. So, we do caution investors, if you're not in Tesla and you want to get in, you're certainly paying a premium for Tesla today. That being said, it might be worth it.
So UBS recently doubled its price target on the stock to $325. Now, this is a stock that really does divide the bulls and the bears like no other, I'd say. I mean, why do you think this stock is so polarizing, and why do you think the bulls are right?
Well, I don't think that the stock's polarizing. What it is Tesla's disrupting the energy industry and the auto industry. And many of the analysts and people on Wall Street have been cozy with energy and autos for their entire careers. And these are huge trillion-dollar industries that are being disrupted and basically destroyed by Tesla. And so a lot of what you're seeing is pushback from the forces that don't want to see Tesla be successful. And those are forces on Wall Street and they're forces off Wall Street. And just the same, you've got on our side all the clean energy people that want to see Tesla successful because climate change is the biggest threat to the human race. I'm living in a smoke-filled state right now here in California. It is smoky the entire state because of climate change, and we have to do something. So the polarizing element of Tesla is the disruption of the fossil fuel industry that's destroying the earth for profit. And so, of course, you're going to see this kind of stuff when there's trillions of dollars involved.
If you can keep your head.
When all about you are losing theirs.
What possibilities might you see?
If you can see it. The world is yours to trade and invest. See it. IG it.
Now, we recently learned that Tesla wasn't included in the S&P 500. This was kind of a surprise to lots of analysts out there. Were you surprised, and do you think it was the right decision?
I don't personally care about the S&P. The 500 stocks that they pick arbitrarily to put in their index, just like the Dow and the Russell, all the indexes have become, how would I say, they're bad ways to try to get the right exposure to the markets. So the S&P 500, for example, is basically 5 stocks that guide the entire index. So we look at inclusion or not inclusion in the index as a completely irrelevant issue. And it's really a harm to the S&P shareholders in that they're not going to be able to participate in the upside that Tesla has over the short and medium term here. So, it's a loss to the owners of the S&P, but we don't own the S&P 500, and so we don't care.
Now, elsewhere in the electric vehicle space, Nikola has been in the headlines after Hindenburg Research said that the electric truck maker was a fraud. What are your thoughts on this story?
we actually came out with that determination well before Hindenburg or Citron. So we did our research into Nikola about a month or two ago when the stock was really moving. And I studied hydrogen for a weekend, and I reached out to Trevor and tried to communicate with him and was rebuffed. And you reach out to a lot of CEOs, and most are very excited to talk to me and have me as a shareholder. And so, because we're so visible. And so I found his behavior very questionable right from the beginning. And we questioned Nikola right from the beginning. And so the Hindenburg reports just verify things we already think. And we think Nikola is a fraud. And it's a horrible thing for the EV and the clean energy industry to have these kind of things blow up, because it hurts the reputation of many of the good players out there like Rivian or Lucid that have great cars and products that are coming out that are here to help revolutionize the world. So it's an unfortunate thing, and I'd say shareholders beware. This thing is looking pretty ugly.
Also, I wanted to ask you about some of the rise of the other Tesla rivals. Just aside from Nikola, there's also Rivian, Fisker, and Lordstown as well. And according to an article in the Times this weekend, they've raised $6.7 billion since June. Clearly, a lot of competition entering the market. Is that alarming as a Tesla shareholder?
Oh, no. This isn't competition in any way. Tesla is so far ahead of these companies haven't even built the factory. So, it's literally like, calling like a high school basketball player competition to Michael Jordan. So, it's not about competition. What it's about is Tesla's job is really mission, and Elon's mission is to drive sustainable transportation. So this is what Tesla actually wants. We want this to happen. We want tons of new great EVs out in the market, because the competition is to ICE cars, not to other EVs. People are making the decision every day. Do I want to spend $70 to fill up my gas tank? And in England, it's like $100 or more to fill up my gas tank, or pay basically nothing to fill up my gas tank. It seems like a no-brainer decision. So we want good EVs out there, and some of these companies are making some great cars like Rivian and Lucid. And so we're excited to see what they have to offer as we move forward.
All right. And very finally, when we look at Tesla's share price, year to date, it's up by 430%. I mean, is that justified? Is the tech sector in a bubble?
Right. So I have this whole thing of, I'm not in the business of trying to tell you what the future brings, but I am the valuation business of what I think things are worth. And, let's be real, Tesla is trading at about twice what I think it's worth. Now, it might be warranted, but we're in a bubble, and we're at the beginning stages of this bubble. And I like bubbles in a way because they make me a lot of money. But the problem is when it ends and how bad it ends. And if you can guess when that will end. So, we're watching the Fed very, very closely, because we think there's too much liquidity actually in the system now. And once they start to pull some of this back, the bubble bursts very quickly. So I caution tech investors. We've rotated out of many of our tech names, not completely, but we've taken profits in many of our tech names and have rolled it into cheaper areas of the market where we see opportunity now that the economies are coming back. So I think the great tech rally is kind of peaking here with Snowflake. So please be careful as an investor buying high-priced technology stocks. You might feel real smart on the short term, but boy, on the long term, you could really lose out on a lot of money, and I've seen this happen. So please be careful, investors. Be prudent. Speak to a financial advisor, and be diversified.
Absolutely. Some very wise words there. Ross, great to chat to you as always.
Thanks for having me, Victoria. Thank you.
That was Ross Gerber from Gerber Kawasaki, who is a Tesla shareholder. Thanks so much for listening to IG's Trading the Markets podcast. I'm Victoria Scholar, and we'll see you soon.
For more videos like these, subscribe to our YouTube channel, IG UK, and make sure to follow us on Twitter. We're at IGTV.